What's up, option traders? In today's video we are going to sell a covered call on Apple. This is going to help us reduce our cost basis. As you can see, the portfolio is up slightly from the last video. We're up about $200, even though if we look at the all-time chart we are still massively down thanks to the assignment of those Apple shares. It looks like the account jumped off a cliff, but as you can see it is starting to recover slowly, so hopefully it won't be too long. With the positive Apple news that's been coming out lately, the share price will just keep going up. Actually, if we look at the daily chart for Apple, you can see it reached the top of a Bollinger Band when the price was at its highest, and it did close outside it. So that along with some other technicals did seem to produce this sell-off. But as you can see, we did manage to hit the bottom of the Bollinger Band, and now we have started to go up, even though we've had a couple of days selling off. But I mean, the whole market is selling off, so it's not just Apple. The RSI was starting to trend upwards, but today is, well, over yesterday and today it started to come back down. And if we look at the TTM squeeze, it was showing a lot of selling pressure. Yesterday we did have the change in momentum, so it looked like we were going to start going in a positive direction, but so far today that has sort of turned around. So we'll see what happens over the next week, but I don't want to let this stop me from earning some premium, even if it's only going to be a small amount. So we're going to go to the Apple chart and look at the Apple chain. As you can see, we're still, down quite considerably from our average share price. So we want to sell some covered calls and get this price down. So let's look at the chain. So if we switch to sell and make sure it's on call, and you can see the share price is about 110 right now. And unfortunately for us, our break even is all the way up around the $126 mark. Our original strike price was 128. So if we want to sell a call that expires this Friday, we can make a whole $2. So we'll look to push out a week and see what kind of premiums that offers. I imagine it's still not going to be great, and as you can see, it's around $9. So I mean, we're going to take this trade. The price of Apple might not come up any further this week, so we want to make a little premium. If we look here, like the bid is 8, the ask is 9. I'm not going to try and get filled at 9 again this week. I want to make sure I get some premium, so we'll fill for the 8, and that will reduce our cost basis by a further 8 cents per share. I know it's not a lot, but obviously everything helps in this situation. So we're going to select the call. We're going to hit continue right here. We have 100 shares, so we're going to do one contract. We're going to go for the 8 cents cover call premium, which will give us an $8 credit. So this means if the price of Apple goes above 128.75 by October the 2nd, my shares will get called away. This isn't likely to happen. As you can see, the percentage chance of this happening is like 97% this won't happen. But even if it does, we'll still make around $2 per share because of the cost basis that I'm at right now. So taking this $8 will bring our cost basis down a little further. We'll be into the low 126s after this. So Apple is Robinhood is showing me what we're agreeing to here. As you can see, I'm agreeing to sell 100 shares of Apple at 128.75 on and before October 2nd. So for this, I will receive the massive credit of $8. So I'm just going to submit that, and it should get filled right away. Alright, so we finished entering our two-step verification. Robinhood obviously, protecting my account, making sure no one makes off with my 100 shares. Appreciate that. As you can see now, the option is in my account, so it's showing the 128.75 call right here, and you can see it was filled at the $8, which I received as a credit. So with that $8, we can look to reduce our cost basis. I do have this little Google sheet that I've been tracking the trade since it started. Originally, we sold a cash secured put at the 128.75 strike price. For this, I was paid the premium of $305, and as you know, we got assigned the shares on that trade. We then sold a put credit spread on Apple. This started well, but with the price of Apple dropping closer and closer, in the end I had to take the loss and close this out for a $98 debit. So we had a net loss on that trade of like $83, which brought our cost basis up to $126.53 in total. So if we add the premium from the call we just sold today, which was 8 cents per share, and we did one contract, you can see that we earned $8 in premium. The total premiums for this trade so far, including all the gains and losses, is $230, and our current cost basis for Apple is now $126.45. So hopefully, like next week, the price of Apple starts to come closer towards my break-even point. This will mean that we get more and more premiums as time goes on. As you can see, if you sell a call closer to the strike price, let's push out a week so we can sort of see a more realistic thing. Just a couple of dollars above the current strike price, you make like $200 a week in premium. So this is where we want to get to. We need the share price to come back to us, that we can start making those big gains again. And obviously, if we do end up getting our shares called away, we'll go back to selling cash secure puts on either Apple or one of the other shares that I follow in my watch list. So until next time, guys, thanks for watching. I really appreciate everyone who's subscribed so far. The community is growing. We hope to hit that 100 subscriber mark soon. So as always, please like, share, and if you haven't currently subscribed to this channel, please consider doing so. It will help out people find some quality content so that we can all earn that passive income trading the wheel.